Hello and welcome to the special budget edition of Simply inTAXicating. What a hectic day it was for Mr. Jaitley. He started quite early, 9 o'clock from Ministry of Finance. He went to the Parliament, there was a quick meeting, and finally the Union Budget 2015 speech started. In many respects, it was a historic budget. It had something for every segment of the economy, for every kind of individual. So the structural fundamental changes have been proposed. So far as black money is concerned, Mr. Jaitley proposed a new legislation which was expected. Of course, the new legislation will have certain kind of salient features which of course he talked about it in his budget speech, and whether it will also have an amnesty aspect rolled into it, we will get to know about it later. So for Mr. Jaitley and for the taxpayers, it was indeed a partly dream budget. Of course, the individual taxpayers perhaps would have expected more relief, which they did not get. But so far as companies are concerned, there are too many changes which have been proposed. On the MAT front, of course, there would be some disappointment so far as corporate India is concerned. So far as service tax is concerned, as expected by the industry, it was expected to be aligned with the GST rollout. Mr. Jaitley once again reiterated his commitment today with respect to GST. So we will certainly have more detailed analysis and other details. Today, we are basically going to give you a glimpse of the changes proposed in the finance bill with respect to different heads. The individual taxpayers like salaried and others, of course, had very high hope from Mr. Jaitley. Of course, he has not really disappointed them. He has made quite a few interesting changes so far as their tax liabilities are concerned. Number one, the transport allowance, which was hiked probably several years back, has finally been doubled from rupees 800 to 1600. The most importantly, the mediclaim, the medical expenses have shot through the roof, and it has become so expensive in tier 1, tier 2, tier 3 cities. Mr. Jaitley has hiked the mediclaim expenses from 15,000 to 25,000. The overall deduction, if we look at, of course, we will look at later. Let's first take another look at, section 80 DDB limit has been specified, limit has been hiked for certain diseases from 60,000 to 80,000. Section 80 DD limit has been increased from 50,000 to 75,000. Section 80 CCC limit has been increased from 1 lakh to 1.5 lakh. In all these benefits, if you club together, Mr. Jaitley mentioned in his budget speech, the total deduction available to an individual taxpayer is going to be in the range of 4,44,200 rupees. Another interesting change which will impact individual taxpayer is that if somebody is purchasing a property, an immovable property, and making an advance payment, the advance payment cannot be more than rupees 20,000 in cash. It has been prohibited. It will be disallowed. And so far as wealth tax is concerned, the wealth tax has been the good news for those who have been paying wealth tax. It has been abolished, it has been scrapped, and in place of wealth tax, Mr. Jaitley has proposed 2% additional surcharge for the super rich. The people who have been paying taxes, of course, in the highest bracket, 30%, and surcharge from last year, of course, the additional surcharge they will have to pay in place of wealth tax. With respect to, if somebody is making contribution to Clean Ganga Fund, or maybe the Prime Minister's favorite scheme, Swachh Bharat Kosh, those contributions will be eligible for Section 80G benefits. Overall, if you look at it, that the government has, Mr. Jaitley has proposed quite a few changes for individual taxpayers. Maybe more will come next year, but so far as individual taxpayers are concerned, this is what he has offered. Living to the expectations of the country and non-residents, and also the promises given by the Prime Minister before poll, and of course in last 9 years, finally the Modi government has come out with a very comprehensive proposal to curb black money. With respect to black money, Mr. Jaitley today, he proposed to come out with a new legislation. Idea is to come up with a new legislation which will of course look at the Benami transactions, the kind of treatment to be given to Benami transactions. For that, he has also said that a few amendments are going to be moved in the Income Tax Act, FEMA, and Prevention of Money Laundering Act. The salient features when he referred to, with the permission of the Speaker in the House, he talked about, one, the foreign assets purchased out of unaccounted transactions or tax evaded, it will be treated as predicate offense. It basically means that the revenue authorities, the law enforcement agencies will have the power to attach and confiscate undeclared assets held abroad. To confiscate assets located in India equivalent to the value of the assets abroad, they will also have power to do so. The foreign assets, with respect to foreign assets, Mr. Jaitley proposes to make filing of returns mandatory. Another aspect, another feature is the undisclosed income from foreign assets, of course, is going to attract the highest tax rate, that is 30%, and more importantly, it will attract 300% penalty. Then another important aspect which is very common, a lot of offenses, tax-related offenses are compilable. In this case, Mr. Jaitley has made it very clear that this is going to be non-compoundable. So far as prosecution and jail terms are concerned, Mr. Jaitley has proposed that this kind of offenses will attract 10 years punishment. As with respect to settlement commission option, he has made it very clear that such an option will not be available to such offenders. And the offenders could be bankers, financial institutions, individuals, all covered under this proposed legislation. Even avators are going to be liable to prosecution and penalty once this law is stable in the parliament. So new law is also going to curb trade-based money laundering, Benami transactions. Of course, there will be a separate bill which is going to be focused totally on curbing the generation of black money and of course tunneling it out of India to foreign vaults. So the government is going to introduce a very comprehensive new law which is going to be tabled perhaps in the budget session itself. That basically means that sometime in March, and probably some of those corresponding amendments have to be done in the IT Act. Those things are going to be carried out. So moving away from the individual taxpayers, for India Inc., Mr. Jaitley had a very special package whereby of course India Inc. was not expecting this kind of announcement. He made an announcement that the corporate tax rate is going to be reduced from 30% to 25% over a period of 4 years. But this certainly does not mean the corporate tax rate has been reduced in this financial year. So the financial year 2015-16, the rate remains the same at 30%. So far as FIs are concerned, they have been exempted. Their capital gains earned out of, say, a transaction has been exempted from MAT. Wealth tax, of course, we talked about it. It has been abolished. GARR was another major demand of all industry bodies, and of course, corporate India and non-resident were expecting some kind of decision on GARR, and GARR has been again deferred by 2 years. The TDS rate and royalty and fees for technical services, as expected, and a lot of demand was there to align it along with the DTA rates, and finally it has been done by Mr. Jaitley. It has been reduced from 25% to 10%. The most importantly, the DTC, the Direct Tax Code, a lot of efforts of the CBDT, a lot of debate, etc. went into it. It has been officially guillotined by Mr. Jaitley. It has been killed. Another interesting aspect is the assets put to use for less than 180 days in a year. The normal practice was the 50% of the amount of additional depreciation. That is to be a bone of contention. And the assessing officers is to generally raise certain doubts, certain questions and disallow. Finally, Mr. Jaitley has made it very clear that there is no room for litigation. He has given that alliance to the taxpayers. Then, of course, so far as the newly created state of Telangana is concerned, and of course Andhra Pradesh, a very special package of tax concessions have been offered to the power generation and distribution companies. Earlier they had 20% depreciation. Now Mr. Jaitley has proposed additional 50% depreciation. That makes it to 35%. Let us now move to the indirect tax. Of course, with respect to the goods and services tax, Mr. Jaitley is trying to align. And to align it, the first thing which he has done, and it was also expected by the domain experts particularly, not the service tax assessees, Mr. Jaitley has hiked the service tax rate from 12% to 14%. The only relief which has come is that education cess, which used to be levied 2% plus 1%, has been done away with. It has been withdrawn, it has been removed. Another aspect, Mr. Jaitley, since GST will have a very small exemption list, Mr. Jaitley is trying to prune the list of exemption under the service tax negative list, and he has done so in terms of removing exemption. Naturally, the exemption is withdrawn. Good number of services which were not attracting service tax will attract service tax now. So some of them could be mutual fund agent to mutual fund distributor or mutual fund or to AMCs. Then of course somebody providing services to as a lottery agent to distributors, etc. They will be covered under this. The most importantly, the services rendered by the government agencies, the government arms, they have been also brought under the service tax net. So far as central excise is concerned, a very interesting amendment which has been made in section 11AC, where there is going to be no penalty for normal period cases if duty is paid along with interest within 30 days from the issuance of so-called notice. Then there is, of course, retrospective exemptions have been granted to the railway and tramway track construction materials. Then, of course, interesting benefit which has been given to central excise and service tax assessee, that they have been allowed to issue digitally signed invoices. That's a long pending demand and in tune with the technology-driven tax administration which Mr. Modi and the Prime Minister has been talking about. Another demand for a long time it has been pending, and of course industry was feeling terribly inconvenienced, was the availment of standard credit period. It used to be 6 months, it has been now extended to 1 year. Then of course, so far as service tax penal provisions are concerned, it has been rationalized, and Mr. Jaitley has proposed to delete section 80 from the Finance Act 1994. Then, as I said, that the withdrawal of service tax exemption will of course bring a lot of services within the radar of the service tax. One of them could be alcohol job work, which is going to attract service tax. And then of course, something has been exempted again. For instance, effluent treatment plant has been exempted from service tax. So far as central excise and customs rates are concerned, on a variety of large basket of goods, the duty rates, inverted tax rates, etc. have been rationalized, so that when India moves towards GST, all these inverted rates are not going to create problem for the indirect tax administration. Secondly, keeping in mind the Make in India scheme, this particular decision to rationalize the inverted tax structure is going to work in favor of all those who are going to join the Make in India bandwagon. With this, of course, there is going to be a lot of other programs on this issue, because we are yet to go and read between the lines, go through the finance bill, which TIOL editorial team is on the job, and we are going to come up with more insightful and detailed episodes about the changes in the budget on Monday. Look forward to our special budget edition on Monday. Thanking you.